The New York Times asks, is AI investment getting too circular? Andrew here. Breaking, the parent company of the New York Stock Exchange has agreed to invest up to $2 billion in Polymarket, the large prediction market operator. While that deal makes headlines, the bigger story swirling around artificial intelligence is the sheer scale of money being poured into the AI ecosystem and whether some of it is looping back to the same companies that supply the hardware. Market movements this morning show S&P 500 and Nasdaq futures slipping into negative territory, yet Advanced Micro Devices is trading higher after announcing a massive new arrangement with OpenAI. According to the article, OpenAI is deploying, by some counts, more than $1 trillion into the AI ecosystem over the next decade. Deals with AMD, NVIDIA, Oracle, CoreWeave, and others are expected to deliver more than 20 gigawatts of computing power, roughly the output of 20 nuclear reactors. The Financial Times estimates that the electricity needed to run that compute could cost about $1 trillion. OpenAI's own finances add another layer of context. The startup is valued at roughly $500 billion, generated about $4.3 billion in sales during the first half of the year, and burned through $2.5 billion in the same period, as reported by The Information. Skeptics point out a potentially circular pattern in several of these deals. The arrangement with NVIDIA involves an up to $100 billion commitment in which the chipmaker pledges to invest in OpenAI. That money could then be used to purchase more NVIDIA processors. Similarly, the AMD deal announced on Monday gives OpenAI a warrant that amounts to a 10% stake in AMD in exchange for agreeing to buy AMD chips for its data centers. As AMD's stock price rises, OpenAI could sell those warrants and use the proceeds to buy yet more AMD chips. Some analysts compare this to vendor financing practices seen during the dot-com boom, when such loops obscured the true demand for technology products and risked overstating the health of the sector. Jim Chanos, the well-known short seller, summed up the concern on social media. Don't you think it's a bit odd that when the narrative is demand for compute is infinite, the sellers keep subsidizing the buyers? On the other side, Brian Colello, a senior equity analyst for Morningstar, wrote that he does not see the risk as present today and believes AI demand is both real and booming, though he agrees the situation bears watching. The ultimate question raised by the piece is how long this spending spree can last. The answer hinges largely on whether OpenAI can afford its outflows. As the article notes, the startup's president, Greg. The text cuts off, leaving the sustainability of the AI investment boom an open question. Thanks for listening.